Welcome over another great video. We're talking tax slips. As an investor, you get to
Mhm.
that February time of year and you get inundated with all these different slips. Which ones do you need? How do you sort it all out? That's what we're going to go through today. And I got to pull this up right away, Kevin. This is the Government of Canada website here. And I'll make it a little bigger, but look at this. This is the type of slips that are
Oh, I
possible. You got all
know.
these different T4s. You got these different T5s. There's T3s, T2202s, and the list goes on and on and on here. So it's easy to get daunted with all those different tax slips. Our goal was going to focus on investors, help them sort all of that out.
Yeah, we don't want to touch base. We can't touch base on every one of these things. We'd be making it a 3-hour video just to go through every slip you could possibly receive. So what we really want to do is concentrate on those that you're going to get strictly for your investments. We did something similar to this last year. We're updating some of what goes on because there are actually new slips that have come out since last year, and we'll touch base on those that are investment oriented, and that's the big thing. But if we take a look, we're basically going to concentrate right here on the investment account scenario, which is the registered accounts and the non-registered accounts. And again, most of these we've seen before, but the one big one you'll see in there is also the FSHA, which is a brand new slip because it was a brand new account that you could open up in 2023.
Yeah, so we're talking about the different types of accounts you could own for investors, and then what slips are going to be a result of those accounts, the RSPs, the TFSAs, the LIRAs, FHSAs, the whole acronym soup there, the alphabet soup. That tends to be your registered accounts, and those different types of slips in that category. And then you've got your non-registered accounts. Maybe that's a joint account, a cash account, a margin account. Goes by a couple of different names. We have different slips for that bucket as well. We'll start on the left side there, Kevin. We'll start with the registered accounts. That'll be the entry there. And I'll throw this up for you. You put money into or take money out of a registered account. Usually it's a slip, right? That tips we have work. And if you're taking money out, you're retired. Well, you're going to get some T4s.
Well, that's exactly it. Every time, if you've earned income over the course of the year when you were working, you got a T4 slip to do that. Same thing happens with your registered accounts. If you have an RSP or a RIF and you're drawing money out of it, you're getting either a T4 RSP or a T4 RIF slip for that. And that shows the income that you've gone. And it may also state if you've had taxes taken off on there as well. So the T4 RSP or the T4 RIF, if you're drawing money from that registered plan, you should be getting one of these each year. Now, of course, it's the complete opposite if you're putting money into an RSP. If you do put money into an RSP, you get a contribution receipt. This is something that you will be sent from your financial institution that will show you that you put this much money into an RSP and it can be utilized against your taxes going forward for the year that you made the contribution, or if you want to carry forward some of that going into the next year or the year after that.
Yeah, so you put money in, you take money out, you get a slip, essentially. That's pretty much how registered accounts work. The new registered account, the first home savings account, same concept, right? You put money in, you're going to get a slip. It'll be a different slip than your RSP, so it's not going to be combined into one. You'll get a separate slip for that guy. In addition, when you take money out, now we're getting a little complicated here, but if you take money out for the purpose of buying a home, no slip, that's pretty straightforward. There's no tax. But if you take money out for a different purpose, you want to buy a car, you just want to spend it, you're allowed to do that, but then it's taxable and you will get a T4 slip in that scenario. So same concept, money in, money out, you get slips related to that. I'll put this one up. It's not really related to investors, but it is related to retirees, and we're talking tax slips, so may as well throw it in. Your government pensions, OAS, CPP, they have slips as well.
Yeah, and basically, as opposed to just a basic T4, you've had the T4 RSP, T4 RIF. This is a T4A, and you're going to get one specifically for your Canada pension plan. You're also going to get another specific one for your old age security, assuming you're collecting both of those. And again, why? Because it's income coming into you, and you have to claim that income on your taxes so the government knows what they should be taking away if there's anything else on top of what you've already paid.
Yeah, and we're jumping around here, but we pretty much talked about the registered accounts. So pull this back up. We're now going to the right bucket there. We're going to talk a little more on some of the non-registered slips you can receive, starting with that T5 statement of investment income. Kevin, what's that one all about?
Yeah, the statement of investment income is if you've had investments that have paid you an income source over the course of the year, whether it's a distribution of some format, you could get a T5 for this because this is income that you have actually earned. The investments you've had have put together something, and this is what it's going to do. But since it's not pure income directly to you, it could be a dividend, it could be something along those lines of a capital gain scenario. You have a different tax system that goes on with it. So you get a T5 for this statement of investment income. That's the first one that goes on. But later on in the course of the year, you could also wind up with a T3 or a variety of the other ones.
We'll talk about those in a second. It's going to get a little nuanced and complicated, but still in the non-registered account, looking at the interest, the dividends you receive, that's usually a T5. If you have capital gains, let's say you bought or sold something, or a capital loss, different slip. That's where the T5s use. They're 8 might come in security transactions. So you bought some shares of whatever company, you'll sell it down the road. There could be a capital gain or a capital loss. That would be listed on this guy, the T5008. So those are the two big ones. Yep. Pretty much everyone's going to get. You might not get it every year. If you don't do any transactions in a non-registered account, they won't send you a T5008 because you didn't do any transactions in that non-registered account, but you still might get that first T5 because maybe you got some interest or some dividends came in, and it'll be listed on that one. Now, up until now, Kevin, we haven't really talked timing, and we'll bring it up here because all the slips to date, what we've talked about, they've been end of February slips, meaning there's a deadline for the end of February where government's got to get you the T4 RSP slip or the FHSA slip or the T5 or the T5008, whatever it is. But if for some reason the government has decided we don't want one deadline, that'd be far too simple, far too easy. We're going to have a couple of deadlines. There's going to be slips that are due by the end of February, then a second category of slips that are due by the end of March. I have them listed there, Kevin, the T3, the T5013. What are those all about?
Yeah, and I mean, the main reason for a lot of this, as we mentioned, it's a trust income allocation or it's a statement of partnership income. A lot of these ones that are issued at that point, some of it depends on what's happened before in the statements that go for the end of February. So flow through shares, partnership shares, mutual funds, real estate investment trusts, all of these. I mean, if you have a mutual fund, you may have to wait and see what everybody else reports by the end of February before you can even start to report yours. And that's why they've given those two in particular till the end of March before they have to be done. So again, it's a limited area as to where some of these things can continue. But if you have anything that's related to this above, you may start getting these ones after the end of March. So they have up till that date, and it will probably start arriving in the beginning of April before you get it. But the government says we need these two deadlines because some of the information from the first ones may need to be done on the second ones.
Yeah, in common investments in your non-registered account, real estate investments are known for this, flow through shares, limited partnerships. There's some common items. There's more. That's not an exclusive list, but it gives you an idea. If you own something like this in your non-registered account, good chance you're getting one of those T3s or one of those trust-related slips, which will have a later deadline than all the ones we listed prior. So you do need to keep that in mind. And some common questions here. A good one is, who sends these slips, Kevin? And of course, that's not going to be a simple answer either, is it?
No. And I mean, basically, a lot of these slips, depending on where your investments are, will be sent from your investment firm. But depending on what you're holding on to, the majority of mutual fund slips come directly from the mutual fund company themselves. And again, it's very important to make sure that you know what your investments are, because that will help give you a guidance as to where these slips might come from. So T4 RSPs, T5s typically come from the investment firm. The mutual funds, or as Clint stated, sort of the limited partnership, things along those lines, they may come from the company directly themselves as to where those slips are going to come. And of course, over the different times they're coming, there's a variety of different options for where do I find out if I've got all my slips?
Yeah, and that's the other thing is, what if I missed one? How do I know if I had all of them? That can get a little complicated. The system has improved over the years. I have to give credit there. It has improved over the years, and you can actually get, I should mention, when these slips are created, they're usually registered with CRA. So if you log into your CRA account, which is on the screen right here, this is a snapshot of how you could do that. They would be listed there. You can actually log in, or maybe your accountant, you get them to log in on your behalf, and they can tell you which slips are there. So if you missed one, you can download it and you can have it right then and there. Or if you think there's more coming and they're not all listed with CRA just yet, well, probably don't file your taxes until they're all listed there. Otherwise, you may have to do an amendment or some other kind of item, which makes it a little more complicated. So lots of slips, different time frames, and they come from different sources. So it can get a little complicated. Hopefully that high-level explainer can help you sort through some of the tax slips as you go through tax season. We have lots of videos, and since we're talking tax, Kevin, there's one on the screen right now about inheritance tax. Is there an inheritance tax in Canada? How does that all work? Click on that video, and we'll see you again very soon.
Take care.